Hey, it's Sunny in Colorado, and today I want to talk about assuming a VA loan. So, assumption loans are kind of rare in the normal world of mortgages. Assuming a loan would just be you taking over somebody's loan, basically. But the VA allows this in a VA loan. So, if you're a veteran and you have a VA loan, and you can let another veteran or somebody that's not a veteran actually assume the loan. But we'll explain later on how that works when somebody is not a veteran and assuming the loan. Loan assumption is a great benefit for someone that is actually assuming the loan. They'll be assuming the exact same payment that you're currently making on the loan. And not only that, if you have a great rate, like a 3%, 4%, which is a super huge great rate nowadays, if you have that particular type of rate, they will assume that particular rate as well. Some of the requirements for assuming a loan is you have to be in good standing with the current loan. You have to be up to date on your payments. If there are any payments, they have to be made up and paid off before the closing of the loan. The buyer would be assuming the whole obligation of the loan and whatever requirements the loan may have tied to it. They will also be required to pay back the VA if for some reason they do default on the loan. There's also a funding fee, just like a regular VA fee of 0.5%, and it has to be paid off by either the person who currently has the loan or the person who is assuming the loan. Either can pay that off or pay that funding fee. So if you had, for example, a $400,000 home, then there's going to be a $2,000 funding fee on that, and either sides can pay that. Also, all exemptions that pertain to VA loans will exist as well in the assumption of that loan. Like disability, 10% disability, and things like that. So if a veteran is assuming another veteran's VA and they have disability of 10% or more, then they can waive that funding fee as well. The buyer must qualify for the mortgage based on current credit and income guidelines provided by the VA as well. A processing fee must also be paid in advance, including paying for the credit check for the buyer that is assuming the loan. When it comes to assuming a VA loan, you automatically are assuming that it has to be a veteran assuming another veteran's VA loan. That is not the truth if that's what you think, but it can be someone that has no veteran benefits that can assume a VA loan. However, just keep in mind this is not actually the benefit for the current seller because that portion of their entitlement will stay with that loan until that loan is paid off. So just keep that in mind. If you are a veteran and you're allowing someone to assume the loan who is not a veteran, you're going to lose that portion of your entitlement until that loan is paid in full. And for this reason, most veterans will only allow other veterans to assume their loan because they want to take their entitlement with them to purchase more properties. Oh, and I almost forgot. The person assuming the loan will have to live in that residence as well. You can't buy it and then rent it out. Or I should say, you can't assume the loan and then rent it out to somebody else. The person assuming the loan must take hold of that residence and live there. So in short, the question is, can a civilian assume a VA loan? The answer is yes. If you're in any doubt of what the assumption of a loan is, basically, when you're normally buying a house, you have to go to a bank, get a loan, yada, 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 do all the paperwork, do all the stuff, get your loan, then purchase the home, have a closing, etc., etc. So when it comes to assuming a loan, the loan is already completed. When you're actually assuming a loan, everything is already done. All you're doing is assuming the current obligations of the current loan that the veteran currently has. So any stipulations in it, you're taking over. The exact payment, you're getting the interest rate. Now a question that might come up is, how do I find an assumable loan? And that's a tricky part. You definitely want to get yourself a real estate agent because they can use the MLSs to search for VA assumable loans. There are websites that specialize in assumable loans. There's also a possibility of print ads, Craigslist, anywhere somebody might post something about a house, and normally in the notes they might allow seller financing or the assumption of the actual loan itself. Now keep in mind, like I said, most mortgages are not assumable. This just happens to be a benefit of having a VA loan. This just happens to be the benefit of having a VA loan. It definitely, if assuming a loan is something you're looking to use in the means of purchasing your home, it definitely may take you a little bit longer in order to find the right home, just due to the fact that you're wanting to take over a loan and you're wanting probably to live in a particular area in a particular neighborhood. So as you narrow down all your needs, it's going to get smaller and smaller, the possibility of actually finding an assumable loan. Let's get to the VA requirements for assuming a loan. I did mention some of these already, but let's just go ahead and go through them. The property must be purchased with the intent of you living in that home. You cannot assume the loan for a VA loan and then rent it out or not live there. Just keep that in mind. You must occupy the residence. There is no minimum credit score requirement from the VA, and that's across the board. But because your loan is actually coming from a bank, 620 is about where banks want to see you at before they approve you going through with that loan. There is a back-end debt-to-income ratio of 45%, so just keep that in mind. If you're not sure what debt-to-income ratio is or back-end debt-to-income ratio, just Google it and you'll be able to see the math there and be able to do it yourself. It's just a way of taking all your bills and what you make and then doing some math and then getting an amount. Someone has to pay the funding fee, that 0.5%, either the buyer or the seller. Either one can assume that or pay that. Just keep in mind the exemption still stands if you have a disability or any of the VA benefits that allow to waive that fee. You have to make a down payment equal to the loan balance and the purchase price. Just keep that in mind as well. If there is a difference between what you're assuming versus what is being sold as, that extra amount has to be taken care of, unless you have a second mortgage for that. There are instances where you don't have to get VA approval to assume a loan, and I'll go over some of those now. So if a borrower of a VA loan dies, a relative can actually assume that loan without having to go through all the hoopla of getting approval for that VA loan. In the occurrence where you're being separated from your spouse or any kind of divorce or something like that, and the spouse takes over the property, they can do that as well without having to get any kind of VA approval. They can automatically assume that loan and take over payments from there. There are some others, but they're just more or less on how the property transfers hands, have to deal with appliances and so forth. But those are all small issues that would require that, and it's not very common, so I'm just not going to cover that in this particular video. But there's plenty of places online you can go through that. You can also go through with your loan officer if for some reason it applies to you. I think the assumption of VA loans is really important in 2023 because interest rates in 2023, as you know, are very high right now according to the market. It was one thing back in 2000 when you had a 7% loan and it was a $200,000 house and your payment was $1,200. But now that same house at $500,000 with a 7% is way above that, double if not more. Okay, so it is an important thing now. So it's a great way to save money to purchase a new home or purchase a property by assuming that loan, I should say. So let's go ahead and go over the pros and cons of assuming a VA loan. So let's cover pros first. Okay, so one of the biggest would be if you were a civilian and you were assuming a VA loan. It doesn't get any better than that. That is a huge pro. Being a civilian and having a VA loan, those type of benefits, there is no bigger pro than that. The funding fees and closing costs are all very much reduced when assuming a VA loan. That's also a pro. And one of the biggest pros would be if you were the veteran seller and you're giving your loan over to another veteran, then you get your full entitlement back and you can now go and use that full entitlement to go purchase another home, no questions asked. Now let's get to some of the cons. So the veteran seller can take a hit to their credit score if for some reason the buyer defaults or misses a payment or any of those type of things. So just keep that in mind. It can affect you negatively by someone else assuming your loan and defaulting or falling behind on payments. And then obviously to the seller, you're giving up your entitlement if you're handing your VA benefit over to a civilian applicant. Just keep that in mind. That portion of your entitlement will be lost until that loan is paid in full. One of the important things you want to do as the veteran seller is make sure you get the release of liability before that closing occurs. This is what will affect you negatively if you do not get the release of liability. This is what I talked earlier in the last con of if for some reason they default on the loan or they make a late payment and you have not received that release of liability, meaning you're not liable for the bad stuff that happens after you've transferred assumption to that loan, it can come back and bite you and affect you negatively on your credit score. And then obviously in today's market, if you had a home for 10 years, you're obviously not going to be selling it for the amount that you paid for it. So there's going to be obviously a large amount that applies. There's going to be a gap, what we usually call an appraisal gap in the real estate business, but there's going to be a gap for that amount. So if you originally purchased your home for $200,000 and you had a $200,000 loan, and let's say you only owe $50,000 of it, and this buyer is going to assume the last $50,000 and pay the rest of that, that has to be paid off. That gap is probably going to be substantial. But in today's market, it's still part of the deal. So I don't really see it as so much a con because you have to pay the market value of a house. It's more a con for the buyer because they got to have the assumption loan and then the regular loan and take care of both of those at the same time. And then the last con, and this is going to vary from case to case, but the assumption of a VA loan can be a long process. So compared to a regular just go out, get the money, pay for something, it can take a little bit longer to process everything and get everything completed. So wrapping it up, that's the basics of a veteran allowing somebody to assume their VA loan. Just remember, one of the biggest things you must do if you do follow this process or somebody approaches you and you end up going through with this is to get that release of liability, because if you do not get that from the lender, you're going to be on the hook, just like if the loan was still yours and somebody else was making payments and then defaulted on it. So make sure the release of liability is issued to you before you go to that closing table. Well, that's all I have to say about the VA assumption loan. I know there's a lot of confusion in how it works, or whether you're veteran or not veteran. There's ways around a lot of stuff in order to complete an assumption loan. But like I said, one of the biggest things you want to do is make sure you get that release of reliability from the lender before you close, to make sure that you're not liable for anything that happens after the fact if you turned over your property and the loan to that person that's making payments. Because if they default and you don't have a release of liability, it's going to hit your credit score and affect you negatively. So till next time, keep doing what you're doing out there. Remember, always forward, guys. And if you have any questions, make sure you put them down below or just reach out to me. If you need any help with real estate in Northern Colorado, I'm here for you. Once again, my name is Sonny Calderon. I'm up here in Northern Colorado. And don't be scared to reach out. Take care of yourself. Till next time.